I would love that everyone that listening feel to kind of like ask questions and kind of like challenge.
There's something in
our
common about the world of entrepreneurship and the world of investment. They're all about going head first into uncertainty.
There's nothing wrong with challenging people's opinion. We're in a free world. Let's challenge it, right?
Yeah, let's debate it.
Well, Sam,
Yes,
we were
sir.
already chatting and we are back. So I don't. Let's not waste time. Let's keep it agile and let's jam on it.
Okay. What I want to talk about today is comes from a conversation you and I were having on funding, on venture capital funding. And we had a conversation with also Keith Gillard, and he brought up the fact that the current venture capital landscape is broken. The current VC model is broken. And I want to continue on that thought. You and I were talking about enterprise software funding and what
Yeah.
it takes to sell an enterprise, what the sales cycles are like, and if it's still a fit for venture capital. Do you remember the conversation we had with Jeffrey Henson? He said on regular enterprise SaaS, you're talking about a multiple of revenue upon exit, right? The multiple of revenue upon exit for AI companies is substantially higher now. So AI companies are receiving up to multiple of 8 of revenue, and that's we're talking established company, not a below $10 million revenue company. It's that established company above and around an 8 multiple of 8. So if a venture capital fund, let's say $100 million fund, puts aside 70% for its first check or first entry into any company. They take small minority share, and they reserve the next 30%. The next 30% is essentially what makes money for them. They discount the 70% that they're putting in, that they're funding. Usually they're only looking for 1, 2, or 3 outliners out of the whole portfolio to create the
Yeah.
returns for them,
Yeah.
right? Um so usually they reserve like 100 million. They reserve $30 million for 2 to 3 companies that they're going to fund at the end.
Yeah.
If the multiple of revenue for AI companies is 8, that follow-on check is almost always going to go to a AI company, even though 50% of the portfolio could be non-AI companies, because their returns are so much more substantial, even if they're performing poorer, even if they're not growing as fast as a regular SaaS company, they're still going to get funded versus the regular SaaS company because the exit multiples are higher. So
Yeah.
what does that mean for um f- for SaaS companies out there? How are they going to get funded? In my opinion, because of emergence of artificial intelligence, there is a huge disruption to the venture capital model, and now there is an actual gap in the market for regular SaaS company fundings. Is it private equity? Is it venture capital? Is it something in between? Is it a new model that's going to get created for these types of companies, and then VCs are purely going to focus on AI because of the higher exit values? How is that going to work?
I think
How do you get funded now?
I mean, there are a few things to unpack, right? I think there are primarily 2 points in what you just said. The thing is, I fully agree that there has been a huge shift on enterprise software, but enterprise software is becoming crucial in this market for AI, because AI needs now to take care of enterprise penetration, to have that kind of like insane multipliers. I'm not 100% sure about the multipliers, because I think in my experience in looking at the market right now in M&A, enterprise software has such a high degree of variance right now, where it's not only about revenue, because clearly uh, a high revenue company is most likely to kind of like have an easy way to get funding than to go into an M&A, unless it's not crucial piece of technology. But I think right now we are adding a new kind of like edge to the world of M&As, that is the asset purchase, where assets become both software and people. Why? It's very simple, because people are a huge differentiator in this AI economy, this AI fight. And the other one is that most of the time the assets that you purchase with that, they can be reused for many other purpose in that acquisition. Like, I give you an example. If you were to be an open source enterprise company, let's imagine OpenShift, or you name any of these open source companies, your value is still also in the people, because that's what can be taken from the company, migrated into the new company. So you and I had this conversation, the multiplier, I think they're very interesting there. However, going back to your main question, I think you are right. The VC space is chasing that insane multiplier, where revenue in AI is accelerated by what I call the ship effect. Like, if you think, and I'm throwing there some example, like there are many AI companies, like Bolt, you name any sort of company that works in AI for vibe coding and whatsoever. They have a high growth rate in terms of adoption, and an insane hidden churn, because they don't deliver on what they promise, but they deliver something that might work and then drop. So that's what is interesting to VC, because there's a high capitalization, high return on that. On the other side, the biggest opportunity for enterprise software is in creating primitives. AI generated software.
Explain to me and the audience what you mean by primitives.
Yeah, I mean, if you think about, I give you an example, right? You just built your website with Claude, right?
Yeah, I did. Yeah.
And it's a beautiful experience, because finally you feel empowered in building, but especially you are learning how to express your idea to
Yeah.
someone that has no freaking clue on what you want to build.
Yeah.
And generating the outcome and the output are a result of how good you are in expressing that. So the so-called prompting. Claude generates this website, right? In your case, it's a very static and simple website that you take, you generate some assets, and you throw them into whatever hosting. I don't know where are you hosting. Where are you hosting your website?
On what is it?
Netlify.
Netlify, yeah.
So Netlify, Vercel, in my honest opinion, they are great for a company like you, for use cases like my personal website. We are hosting the Game of Capital on Vercel. But as an enterprise, you will never host a stuff on this platform. Why? Because as an enterprise, you have requirements, you have limitation, but especially you're already paying your cloud bill, and you don't want to pay Vercel and Netlify that they don't own any hardware and they just rent it from AWS. It's cheaper if you host it yourself on AWS.
Yeah.
But what they give you is the ease. You took this and you say connect to Netlify, right?
Yeah.
I know very well,
It takes care of my forms. It takes care of the keys. It takes care of all that.
It takes care of everything that fundamentally you don't want to take care of, right? So they are great for this use case, but the enterprise buyer has completely different requirements. The app that is created by Claude is not good enough for what the enterprise usually needs. And Claude doesn't know what the enterprise needs. You can write as many skills as you want. You can train Claude with context. You can do whatever.
Yeah.
But you will still need the human in the loop to act on the output generated by Claude to make it accepted by this enterprise. And trust me, Vercel, Netlify, any hosting provider, they come to you and they say, but this thing, we are going to change it. They're not going to change it. They're not going to change it. It's not going to happen. They can tell whatever they want to the universe. And so for them, for example, to cross the barrier of their market cap, like they're both companies that they generate around $2 million in revenue, between $100 and $200 million in revenue. but they cannot go to the big enterprise where you get the big long-term retention like IBM did, right? They live on you, myself, and other people paying the $100 and have a lot of people.
Yeah.
Now, what I mean AI needs primitives is that in order for the output generated by, for example, Claude, to run into the enterprise, there is a huge gap, right? So now is the opportunity for all these companies that they create something that helps to take the output of the AI into the already value chain and supply chain of the enterprise. These are the companies that are gonna really be extremely interesting for acquisition. They're gonna be the target of all these hosting companies that are trying to IPO. If you notice that none of them IPO'd. Vercel will IPO probably in the next 12 months. The same Netlify. Cloudflare clearly is a different story, but uh, that's basically where you see. So building these primitives are those kind of like software and software appliances that they basically help taking any AI generated output and make it enterprise ready in a
Hmm.
nutshell.
Hmm.
And Netlify, Vercel, they cannot do it. Like even if you think about Cloudflare, they run most of their load on the edge, not behind the scenes, so not to run APIs and data and so on and so forth. So that's where it basically gets interesting. You have companies like Supabase, for example, that they started their own world into building this database as a service. Insanely successful in the AI space. They will need to conquer the enterprise because that's what basically makes a good IPO valuation. Does it make sense?
It does. But here's the thing.
Yeah.
I understand what you're saying from a technical perspective. What we're talking about, venture investors who
Mhm.
are people who are managing, let's say 100, 200,
Yeah.
$300 million fund, and they have to deploy that within a, very tight
Yeah.
time period. It's a pretty intense and pretty stressful job to be a general partner as a venture
Yeah.
capitalist. You always have to be out there looking for opportunities, and you always want that top 10% of companies. You don't want all companies. You want the ones that are not coming to you. You want the ones that are getting funded privately, right? Between group of investors who know what they're doing, like the old days back in the day when the what was it, the PayPal mafia was kept funding companies amongst themselves
Yeah.
essentially.
Right.
So you always want that high quality product. Let's say your initial portfolio that you create is going to be about 50 companies.
Yeah.
Right now, from statistically, more than half, about 55% to 60% of companies that are getting funded are essentially AI companies. We can argue what that means. What does it mean to
Sure.
be an
Sure.
AI
Yeah.
company?
Yeah.
But they're AI companies. Let's say from an investment. Let's keep it simple, for investment sake. They're AI companies, and if the follow-on check is going to go to ones that are generating the most returns, just my mind says, in my opinion, it's going to be most likely, if it's 2 to 3 companies, going to be all AI companies, right? So let's
Yeah.
let's say now you have an enterprise SaaS company, right? And you want to get funded. Where do you go? If you go to traditional VCs, that's the fight you're going to face. You're going to be fighting against the current, against AI companies that are just because of being an AI company, and investors thinking that they're highly scalable, they're more marketable, they're easier to sell, they're going to get funded more. So
Yeah.
if you go to private equity, it's a completely different game. Um, from an ownership perspective, there could be similar. At later stages, you only own maybe 15 to 20%, 30% of your company. With private equity, it's the same, right? You own 30% of your company, 40% at max, and they fund you. They don't expect the higher growth, but you get funded. You get funded for any until your business case for your funding rounds makes sense. The private equity company can essentially fund you. But what's in between venture capital and private equity? even software private equity is getting disrupted because of AI. I think
I
I
agree.
I opened this up last time that I know five private equity firms that are moving away from software because they don't even know if their existing portfolios are going to survive
I
because of
mean,
all the disruption. So where do you go for funding now?
that one comes also a little bit by with ignorance in the subject matter, in my opinion, because the truth is, so there are two things. The first one is that VCs are working against, unfortunately, like healthcare in Canada, like zero creativity, high degree of protocols, that we like it or not is true. Like we cannot hide it, it's true. So they go take your product market fit, your founding stage, product market fit, kind of like score. They check your acceleration, and to be very honest, enterprise software is not fighting against revenue; is fighting against time of revenue. Like,
Yeah.
give you an example. A contract in enterprise is always a let's say, at least, right, a two digits contract. We're talking about 20, 30, 50, $90,000 up, $2 million, right? A customer in AI is $20,
Yeah.
right?
Yeah.
So my time of becoming a customer is shorter than your time as an enterprise to become my customer. While my value is higher in the beginning, in the time that I close the contract, you already come and get another 20,000 users.
Oh,
So you
definitely.
give me on value.
Your moat is higher in
100%.
enterprise because when you get in, there's very if you unless you perform very poorly, there's a very low chance that you're going to lose that contract for next year and the year after, year after.
Once
If
that
you're
you're in,
performing
you're in.
well, you're going to keep it. The
Exactly.
$20 customer is going to fall off as soon as a better product comes, and they're going to jump and go try something
But
else.
but
I've done that.
nobody cares. But nobody cares because in the economy of raising money,
But
I'm but you create always a scenario to raise the highest amount of capital you can at the highest valuation you can, right?
yeah.
That, I mean, I make an example. A pasta business is not focusing on exit; it's focusing on revenue and margin,
Yeah.
right? I
Yeah.
build an AI company. I generally do not care about that. I care about max valuation, right? That's why you see the skyrocketing valuation at almost a $1 trillion.
Oh yeah, because you're not focusing on profitability. You're focusing on scaling, right?
On,
You're
on
focusing on covering, be able to cover, produce more products,
correct,
cover more
correct,
bases, cover more types of customers, and essentially
correct.
increasing your revenue. They're completely different concepts. I get it.
The the world of VC is like the users of AI. The majority, they focus on that highest return for their LPs.
Yeah, 100%.
While the enterprise, I think currently the enterprise SaaS model requires a completely new set of metrics, a completely new set of mindset, a new idea of capitalizing and capital. Simple example. Right now, I think before we were used to have the Series A and Series B, Series C, that they were like focus on extremely high raise for high valuation. I believe that the future of enterprise software is a conservative raise, high valuation.
So
Like I
raise less money.
raise less money with a valuation that is high because your return isn't a multi-year return. We focus all the raising, the capital funding in the past on short return. So you and I spoke a lot about it. Like you have like a 5-year cycle, 4-year cycle. You pick your cycle. In enterprise, I usually sign after the second year. I sign a 5 years deal with you.
Hmm.
So my return to you as an investor is coming after 7 years on a high capital, high margin, high EBITDA, right?
Yeah. Yeah.
So those things are different. The world of enterprise, unfortunately, I don't think nowadays is really understood by the venture world. I believe, and I'm very honest, that nowadays we need to create a new model for enterprise software. I don't think the definition SaaS, PaaS, whatever, it makes any sense anymore. It's just like a legacy definition. I think nowadays we talk about software, and then
AI is still SaaS. It's SaaS is the model. It's the model of paying a monthly subscription for
correct.
your service.
So
Yeah,
a subscription model, but I
yeah.
think there are different models that are going to be applied to enterprise. I think we are trying fundamentally to squeeze different models. Like one thing that I face as a founder is that why nowadays I need to waste so much time to invent a pricing model or a revenue model for my own enterprise software. It should be a template. You build enterprise, this is how you build billing. This is how you build this is the price. This is the multiplier that you put on top of it. This is like, so we equalize that. There's a very kind of like disparity in equalizing. Well, we equalize the value of token in AI because now they all cost the same, right? But the value that they bring is different. It's based on time, on which model is better in that moment in time. In enterprise, we didn't really do that. We still go for KPIs, skill your finger in the air to find what the value is. So much of the enterprise software is behind what I call blind pricing. There is no transparent pricing, but it's all because I personally feel that nowadays, and you know, in first person problem, raising money in the for enterprise software really needs a new set of minds to provide that
I
capital.
100% agree with you there. I don't think the traditional private equity applies.
Hmm,
I don't think the traditional venture model applies.
no.
And when you say raise less money for higher valuation, raising less money means a different operating model.
Yeah,
For venture in a venture model, you want to be multiplying your revenue on a year-over-year basis. So you're focusing on hyper growth.
hyper growth. Yeah,
You're focusing on not just doubling, tripling your revenue even in
yeah,
the early
10x
years,
even,
to 10x even,
10x.
like in the early
Yeah.
years, right?
Yeah.
In a few years amount of time. But when you raise less money, then maybe you should be happy with a 30-40%, 50% growth, maybe just 100% growth. If you have
Yeah,
1
but
million revenue, 2 million revenue next year,
no, no.
and keep the company lean so you can hit profitability sooner. So
I,
is that the new model for
I
enterprise?
I think the new model for enterprise is an hybrid because one thing that everyone forgets is that my 30% growth is not 30%.
What is it?
If I make 1 million this year in enterprise, there's a high chance that this million is going to renew next year,
Yeah,
right?
yeah,
So now if I make it 3 million, I only double my revenue, but I carry with me all the renewals. Renewals, there, I think we are focusing on the we are not focusing on the mechanics, on how the money is generated. Like the effort against churn that the AI companies has is extremely high.
yeah.
While in enterprise, the cost of acquisition is insanely
Really
high.
high, but the churn is low.
Churn low, longevity, very interesting for M&A, very interesting for IPO. So I think we need to
Very interesting
introduce
for private equity. Low
for hedge
churn,
funds
private
or
equity makes sense.
private equity. Private equity, I think, is going to be the best model. Is going to be, sorry, the best foundational model
Yeah,
for this new phase of investing in primitives. The problem with primitives is that they grow and they scale very slowly because they have a highest cost of creation.
yeah,
They have a slow adoption into the market, but they become extremely sticky. The mechanics of creating value, so the go-to-market mechanics of an enterprise software nowadays, kind of like complicated. Like
yeah,
most of enterprise companies, they fail not because they misexecute their go-to-market. It's because it takes a lot of time, and time is money, and apparently they don't give money focusing on this time to market, because everyone expects that basically you build a piece of software and tomorrow morning every bank in the world is going to use it.
Well, let's walk through that a little bit. I don't know if you remember, we were having lunch. I told you about the company that I was
Yeah,
looking at. 5 million revenue, still amazing margin, about 2 million EBITDA,
yeah,
and the owners decided not to sell the business.
yeah.
We were in discussions at the time. So I thought, why don't I go in with a growth capital offer and buy, instead of buying the whole company, why don't I just buy 20% of the company, and with an option to buy it later, in, let's say, in a few years' time, when they've grown it to $10 million in revenue, higher EBITDA at the time, and all I have to do then, because I own the 20%, all I have to do is just restructure, recapitalize, take
Mhm.
on bank debt, and acquire the business. But
Yeah,
that's the private equity model. The private equity model, even if you do a minority investment in a company, it's to acquire it at a later time, right? It's
mhm.
the target is always to acquire at a later time. And if you own 20% of it at well, it makes it so much easier, right?
I agree.
So let's walk through this. A software company comes, they're not profitable. You cannot take it to the bank you cannot raise debt. So
Mm.
all the capital that you're putting in is equity, until it becomes profitable, and it shows a track record of profitability over a few years. Then the banks start to look at it. And
Yeah,
they seriously start to look at it and say, "Oh, actually, we like this. We want to fund this thing." So the private equity play for enterprise SaaS would be, as for early stage. Now that VC is disrupted, does it mean private equity has to come in earlier with minority investment in a hopes for an acquisition down the line,
yeah.
or do they still wait for the company to grow and then buy it when it's grown? So how do you play that?
Two things. The first one is that every tech company's destiny is to be acquired by an established tech company.
So
Like,
it's strategic.
I mean, I had this discussion many times, and it makes me laugh when people disagree. If you build a tech company today, you don't build it to run it to be the next Meta. The next Meta is going to be acquired by Meta, because the capital that Meta has right now, there is no company is going to get it.
The
Like,
next Meta is Meta.
the next Meta is Meta. The next IBM is IBM. The next Oracle is Oracle. The next Microsoft is
They're
Microsoft.
just too big.
The next OpenAI is OpenAI. Like, look at what Musk did with Twitter and created a agglomerate. Like, that was that was a brilliant move.
He did lose a lot of money on it.
Yeah, but now the capitalization of the agglomerate, it
Yeah,
pays back for all the money that he lost in
yeah, yeah,
a fraction of a second.
yeah.
The, the way where I see a huge opportunity, and it sounds crazy, is that all these enterprise software companies will actually find their wave of funding to scale into their customers. What I mean is that most of the customer in the enterprise, they have a venture side of it. Banks, right? We just mentioned it. Telco, they have a venture side. Think about Telos Ventures. Name all the other. Uh, Media, they have their ventures. One of our customers has a venture branch. But think about Sky, think about Paramount, think about Warner Bros, think Netflix, all, right? I believe that that growth is going to come from the first 10 customers willing to invest in that product. I deeply believe that if we focus on that, we are creating
Customers
really more,
investing in the product.
not only buy license, really being investors. So,
What would that model be called? It's not venture model.
well, theoretically,
Theoretically, it's still venture.
it's venture because it's venture, but the big thing is that they get in enterprise. I had this conversation this morning. In enterprise, you want a fast track to the next customer. Like, you sign a deal with a bank or you sign a deal with someone, because you want to get into the Rolodex. The Rolodex will take you to shorter procurement time. It's obvious. Friends bring friends. Easy peasy. Like I saw it in Talos many times and so on. I mean, let's not hide the truth. Friends bring friends. That's what you want. Because then when you can start to hyperscale, you can hyperscale when you can get into your first 10 customers Rolodex and introduce it to other 10 people. And because you invested, you're gonna push. That's my very provocative statement that if we want to grow, the traditional model of growth is broken because you fight against time. The only way to fight against time is to have a fast lane to it.
But at the same time, given the funding risk for non-AI companies, do you think the operating model for a enterprise software non-AI platform would be different now because
100%.
funding is more hard to find?
100%.
The solution to this gap hasn't been created yet. There's no fund that came out. We need to bring a venture capitalist to the podcast and talk about this.
Is not.
There
Oh,
is no
sorry.
solution yet. So do you go leaner, path to
Yeah,
profitability sooner,
yeah, yeah.
maybe
Nah,
a lower expected growth rate
mm,
in comparison to VC model? Do you
no,
operate like that because you know there's going to be lack of funding?
no. In my honest view, you operate with consciousness, and
What do you mean?
it doesn't mean that you basically compromise on the growth rate. You don't compromise on anything. I think the new operating model of enterprise software is sustainability and consciousness. Like you need to run. My rule of thumb is that in this new economy where funding gets hard, if you can prove that you can run on top of your revenue with no extra funding needed, you are becoming basically a beast on the market because now
100%. But that
you are
that it
interested.
that in itself creates scale, makes scale much harder.
Much
Because let's
harder.
say let's say you get $1 million of contracts year
Yeah,
one, year
yeah,
two,
yeah.
and then next year you have to do six. To
Mm.
service those contracts, you need enough working capital within the company. And
Yeah,
if you
but
don't,
because
and at early stage, if you don't have that working capital as outside funding, it's going to be very hard to execute on those contracts.
yeah, but now
Especially
that
if it's early stage, because in early stage you're still developing the technology enterprise, and you're still possibly not profitable on a per contract basis, right?
in
You're
early
still
stage,
developing. You're still creating code. You're still
yeah,
creating, expanding the product.
in early stage is impossible. Like in pre-seed and seed, to be
Yeah,
honest, it's a miracle to run on revenue. My point of view is that in tech nowadays we have been so used to waste a lot of energy and time that now it's time that actually we look at ourselves and say, can I take the product that I have and grow it into a self-sustainable business? And then I will get access to different kind of capital. If I go to a bank
right,
and say I can sustain
right.
myself with this like pile of people, with this bunch of like handful of people, and barely standing alone software, and I need $1 million to grow my revenue to 10x. I can prove it on paper that if I take if I have $1 million and I burn 150K, right? If you give me $1 million, I can go to $5 million. It's more credible if I bring you 12 months of like proving that with burning 150 a month, so to burn basically $1.5 million, I can at least bring $1 million, right? I have only $500,000 in loss, right? But if I can bring it with revenue and I break even, I can show you that adding an extra million will enable me to at least double it. And now we'll generate $3 million because the $1 million that I have is already going. The other secret is to kind of like reduce massively the amount of services that we sell with the software. Enterprise has been renowned to bring a high number of cost, so high value of cost in terms of like services, and the goal is to lower that cost as much as possible, not between day and night. And let me say, Sam, because I had this chat way too many times in the past 6 months with people. Enterprise software, sorry, let me rephrase it. IBM and every enterprise company that is worth a godzillion amount of money on the stock market makes most of their revenue out of services, right?
Hmm.
It took years to come there,
Hmm.
decades, right? But services has always been a component of enterprise and it will never go away. Everyone that tells you no, enterprise software is self-serve, they are BSing you, because there is no enterprise where I worked that self-serve software. None. Because there is one thing called liability. And people wants to have a liability on everything. Like, have you ever heard of a bank that buys blindly software? No. Or a manufacturing company that goes and buys Salesforce, going on the website and putting the credit card.
No.
No, because there are procurement process, there is legal, there is everything. And so I think honestly, like, this new way of running enterprise software company, it's something that we need to get used to.
Yeah.
But at the same time, it becomes really a necessity, because nowadays even AI companies, they are really conscious about their money, because they know that the highest cost is in renting GPUs.
Hmm.
So now humans, now software, now processes, they need to be cheap enough to justify the capital needed to buy GPUs.
And
I
they
give you an
all
example.
and they all need to work very creatively to limit the usage of the user.
100%. And the other thing is, I can tell you that there was a company we were chatting with, and we won the next phase in conversation, because I simply told them, we make you save $1 million on your cloud bill that you don't have to save. You can redirect into your AI budget. And now they found that the money for our license out of the AI budget. You know why? Because we cost 1/10 of the money they can get out of the saving. So for us, for them is a purely capex move,
Hmm.
right? For them is in this world of opex. And let's be honest, we are in this other curve now. We are in the highly opex wave. It's okay. They want it. They say, well, if I invest 100, I can get 1 million that I can reuse in GPUs. Well, for sure. So if I do a disaster that I kind of like fail and generate only a penny worth of value out of that AI initiative, at least I didn't lose $1 million. I lost less.
Luca, to recap, I think you
Mm.
said it beautifully, and I want to recap on this. It's still possible, and from a model perspective, it's still possible to get that initial check as an enterprise software.
Yeah,
It's going to be hard to get that follow-on check, which is
yeah,
the check you're chasing after, essentially.
yeah,
The initial
yeah,
check is just to build your team, build your initial product, get your first customers, and show that first of all you can sell. Second of all, you have momentum, and show that your product is desirable. So that's still possible. What you said in terms of the operating model of enterprise SaaS is that get your initial check and then learn to run on revenue beyond that.
yeah,
Because
yeah.
the getting the next check from the same investors as it's going to be very, very difficult.
You're gonna fight against too many odds and too many hard battles. Like, you're
Yeah.
fighting against a company that generates $60 million in completely BS technology, but for the investor, the 60
Run
million
by three
revenue.
people.
I can tell you that in the world of like sandboxes in AI, and I don't mention anybody because I would be insulting them, is basically ridiculous how people can even buy it, and they make $60 million. The company that does that knows what I'm talking about, but that's the thing, right? And for the investor, they would rather invest in this company that went from 6 million to 60 million within 12 months than in a company that went from 0 to 1 million in enterprise. Because you see, numbers are different, right? Still one order of magnitude of growth, but the numbers are different. And so for the LPs and for their pride to go to the partners meeting and say my company grew from 6 to 60, it sounds way better in the pissing contest than my company just closed the first $1 million in revenue.
You know, you know what? I have a thesis that if you want to create a portfolio of 10 good software companies that have path to profitability, may even be profitable, go to venture funds and try to acquire or try to take out clean the cap table of some of the companies that didn't make it to the next round, but they're still good companies.
I fully agree, because those companies, they are such a huge value for private equity.
Oh yeah,
Like you and I spoke about my dream. My dream in my next phase is actually to really create that venture funds that actually is fully focused on these 10 companies.
yeah,
Like
yeah,
focus on a very limited portfolio
yeah,
with highly strategical involvement into this company.
yeah.
So that in between VCs and private equity,
That's the
where
Bill Ackman model.
the,
Smaller number of
well,
companies, more focus on those companies,
yeah,
and just run them, make money, and sell them if you have to, and then get another company.
no,
But
no,
still focus on a small number of portfolio companies. With that focus, you can do much better than if you just purely play the numbers game. I want to invest in or acquire 30 companies.
I
Where are you
need
focusing? Where are you putting your time?
I need operators. The problem with investors is that their involvement is usually useless. To be very honest with you, no, really, as a
Thanks.
founder, as a, no, it's different, right? Because private equity has a different involvement inside of the companies. Like
Oh yeah,
your interest is in to be a kind of like doppelganger on the operator, right? You want to be a
yeah.
shadow copy of that operator, because you
Oh yeah.
say, because you
You have
know
to
that,
have you have to build redundancies.
like, imagine that you are in a food chain, whatever company, right? Even
Yeah,
if you don't know how to cook, you invest in the company.
yeah.
Trust me, you need to learn
How to
that.
cook.
It's like Elon Musk and all the companies that he took. Just to give an example, he's so deeply technically involved in the business that he
Yeah,
knows how to support the business. And I'm
yeah,
reading this beautiful book that is called The Algorithm, a beautiful book from the former president of Tesla. Great book. I recommend you to read it or to have an audiobook. And he basically was like a CEO. He had many exits, and then he became like an employee of the CEO. But what he actually says in the book is extremely profound, and I think I want to end with that. Is that Elon was operating the decision in the company because he was deeply trusting these high-profile operators like him as a president. But at the same time, which is extremely interesting, they felt so empowered and so at the same time control that they would always outperform. The control comes from that kind of level of fear that they could not BS that person, but they felt highly supported in bouncing ideas, as well as he was writing. I would receive a phone call in the middle of the night with a crazy idea from Elon, and we would brainstorm for a couple of hours. I think what I'm looking into this future of funding is that this dynamic has been lost,
yeah.
right? It became a very transactional thing. And so my hope
That's the
as a
venture
founder is that,
model. That's the venture model because venture model is purely based on numbers. Um,
but
your investors expect if you go want to raise a venture fund now and you say, for example, oh, I'm not going to invest in AI, I'm going to focus on this. Nobody's going to give you money. Nobody's going to invest in you. So your investors are expecting you to create at least a couple of unicorns out of $100 million, three unicorns out of $100 million fund, right?
but
So you're
VCs,
still under a lot of pressure to invest in a lot of AI companies because your investors expect you to. right?
But because
So
VCs are
and
brokers, Sam.
they're brokers, right? So and they have to play the numbers game because the failure rate for early stage is so high. So they have to invest in minimum of 20 to 50 companies for
Uh,
$100 million fund,
uh, uh,
right? And
yeah,
so your relationship with your operators, with your founders as a VC is purely transactional. You
100%.
can maybe focus technically, put your time on a few that are essentially going to receive your follow-on check, but the rest you're purely sitting on the board. You're going in there, you're looking at the numbers, you're looking at the KPIs, and it's a purely transactional experience. That's the difference between private equity. The Blackman model, it could even say it's not necessarily private equity because he's focusing on public market. But the private equity model is that you focus on a small number of companies, but you have a deep relationship with each of your founders, with each of your
Yeah.
businesses. You're deeply entangled within their operations, their strategies for next year, their funding, their capitalization, everything. So I think the model for going forward, the model for enterprise software is a hybrid, and it hasn't been created yet.
I
I truly
yeah.
believe there's a market gap right now for funding these types of companies beyond the first round. First round is still always going to be VCs. The first check coming in, it's still going to be VCs because no private equity is going to co-fund a early stage, pre-revenue, even pre-product company. Nobody. So
I
VCs will still do that. But after you've generated maybe $2-3 million of revenue, maybe you project it to be profitable in a year and a half, in two, and you're not going to receive your follow-on check because you're not an AI company. The path beyond that, I think, is private equity, but it's a hybrid of private equity and venture capital. And I don't think we're there yet.
No, I don't think. I think. I mean, my hope is that all these great exits that are going to happen in the next 12 to 18 months, they will generate this new wave of investor and venture kind of like models.
Yeah,
Because I think the tech world needs really tech investors, and we lost them. Generally speaking, we really lost them. It's
because
a
they're
language.
illiquid. Because they're illiquid. Now these IPOs are going to generate that liquidity, that necessary liquidity for the tech market.
I agree.
Um, Funding went everywhere, and then exits stopped. Companies stopped exiting. People like acquisitions. The number of acquisitions went down massively over the past few years.
That you will
So
see this
it's just
insane growth, and
yeah. But now with with a few IPOs, with a few major exits, there's going to be major liquidity coming back to the market, and I'm curious to see how the market shapes after that.
I'm very curious, honestly, with you. Uh, I'm observing the same thing, and I'm extremely excited to see what's going to happen because, like I said, there is this huge opportunity in this new liquidity to create this new wave of companies, this new wave of technology primitives that are lacking. And then, you and I spoke lengthily, and I think the other world, the world of open source, is going to be another very interesting angle where there's a lot of potential, right? And yeah, I think, and open and close bracket, technology is beautiful because it always breaks, and you can always build the same thing, make it work, and somebody will buy it just not to fix the
And you can
broken thing.
always keep improving it. There's no stopping in terms of, oh, I want to add this, I want to do that, I want to do this. There's always ways for you to keep continuously improve your technology.
I think
That's what excites me about working in the technology sector.
the thing
It's the
just to
same thing
close
with manufacturing. It's the same thing with any other business,
I was
to
just
be
saying
completely honest.
I was just saying the same, Sam. One very interesting thing is that you and I has this conversation where I come from my tech world, and you are more into the physical world of manufacturing, creating things. Which, to be honest, I think I love the craft of things. So for me, is interesting. But at the same time, there is a very interesting pattern that we saw that in order to, if we want to scale any company, it's all about simplification. It's all about finding the minimum viable set of SKUs and products that it can scale at a very, very smart cost. And AI is not going to help there because, like, you don't need AI for that. You need the AI is
AI
gonna,
helps with the research.
yeah, but look, I think, and then, I mean, we are already over time. I tell you one thing, where AI will do a massive amount of impact is in medicine and treating people, because the cost of simulation and the risk of simulation is extremely high, where AI has a very good depth in understanding all of that. Using AI to build a website is a waste of energy and intelligence. Using AI to create an API, it's an insult, right? Using AI to build anything that is fundamentally not bringing any real direct value to humanity is a misuse of AI. That's what I'm saying. I studied AI. I'm not taking the ethical side of AI. I'm just saying that what everyone is now chasing is a bubble that is going to burst, because the real good use of AI is in really doing something that is going to take way too much time for humans to solve. Protein folding, all DNA disease remediation, uh, uh, nuclear energy research. Those are the things that
I
they
think with research, it's going to do amazing stuff.
research is where I personally feel good about using AI. Like, I feel that if we were using AI in the right way, if somebody was really, no, sorry, if we were giving to Dr. Demis Hassabis and his team and the great work they've been doing with DeepMind, the right space and no distraction with all this BS that Gemini and Google are building and all these other companies are doing, building sandboxes to run agent code, agentic code, right? Because reading emails requires 20 GPUs nowadays, right? It doesn't require you to open the freaking browser and reading your emails, right? Because it's too much time while you're pooping on the toilet to read your emails, right? Because
Automation.
humans, no, because humans, they're extremely good at finding excuses. That's the reality. Where
Yeah,
AI is,
but go ahead.
if I need to deploy $1 billion, like, imagine that we are deploying $1 billion in a site builder, in building websites, right? Fathom that, Netlify, right? Vercel. They didn't change positively humanity at all. They only are carbon producing because they're burning. But we are living in a space where healthcare is a huge problem. Can you imagine that to read an EEG or an ECG, it takes 3 days of a human to read a graph, something that an AI algorithm can read live in real time? Like, those are the problems where AI and capital should be invested, not building a website. So that one is funny. It's a fun thing. But if we really think deeply on how much money we are throwing away, where the major impact could be there, and investing in that will make you a million X the money that you invest.
I want to push back on this, but I think this is another episode. This is going to be the beginning of another episode. The
The
value
next
of
one.
AI and how it changes the economic landscape. I'm going to push back on the fact that you said AI is a bubble and it's about to burst. I think
Oh,
from a valuation perspective, from a value perspective and funding perspective, there is a bubble there and that bubble will burst. But from a technology perspective, this technology, there's no technological bubble. And I'm going to make the case of comparison to crypto. Crypto
yeah.
came hot market, Web3, but
Ah, where is
uh,
that?
and where is that?
In
Exactly.
Dubai. In
No,
Dubai.
the difference between there's a huge difference between technological ability of artificial intelligence and the use cases of crypto in the real world, in the real economical world, right? And I, and there is AI comes the technology itself. I'm not talking about the value. Obviously, in the valuation of it in the market, there is a bubble for sure. But the technology itself, it's so disrupting. Then I think the economical landscape, big corporations, all of them, it's going to change. The fact that I or anybody, I wouldn't diminish the value of you or somebody who can't code, or you can code, but I mean, just saying somebody who can code, building their own website, there's so much value in it from a economical
Create,
perspective that it's
creating new
gonna
businesses,
creating it's gonna be millions and millions of new businesses that are popping up.
but I don't
These,
need AI for that, Sam.
but I know, but I mean,
I don't
it's
need AI.
they do.
No,
Those
weeks.
people do.
No,
Those
no, no,
people, you don't need AI. Those people
no.
do.
No, Sam, I give you an example. Wix or any other site builder that was built 5 years ago didn't have AI. It's just that people were not in the bubble to jump into that. It's a marketing thing. Like I ask a question, right? Now
I've built a website on Wix, and I've now built a website on Cloud Design and Cloud Code.
but because it's more exciting to build.
Monumental user experience difference. Monumental.
Is because you are excited. But if I give you Dreamweaver that was built 20 years ago, you could still build a website and be creative. Let's be very honest.
Sure.
Okay, so you don't need AI to build a website. But now I ask you another fundamental question that we're gonna then we're gonna close, I promise. But one thing, right? Now every enterprise says that they are gonna cut their cost with the use of AI, right?
Yeah.
It's a trend, right?
Yes.
I have a
It's a
question for you.
trend it's a story that's being told by AI companies. And I don't truly believe in it though.
No, but also banks and so on.
I don't think AI is gonna come in to enterprise or corporations and replace people's jobs.
No. I agree. I
Yeah.
agree.
Yeah.
But he's gonna actually make obsolete the chair warmer, the people that they were bringing no value to companies.
Absolutely.
It's a cleaning exercise, which is great.
Yes.
But I'm
Yes.
actually looking at the narrative that is pushed, right? As an enterprise, I use AI to cut cost and time to market,
Yeah.
right?
Yeah.
So is your subscription, is your monthly fee of the bank change? Did they cut it also?
No.
So to you as a consumer, there is no benefit. The only benefit is in the margin of the bank. Let's use technology to equalize also the value to the consumers. And that's why I feel that it's just a nice instrument. And you and I were talking before, and I have no problem to say that in Vancouver, where we are going to see exactly this beautiful exercise with Thales building this data center. They are even incapable of building a decent phone plan that works. Equally, Rogers and all the others. But because of the relationship between the new CEO and the prime minister, there's economical value. I want to see if it will bring economical value to the city, to the citizen, to everyone, to healthcare. It's going to bring money to Mr. Carney that probably is collecting his paycheck, to Victor, his best friend sitting at the board of Thales, to the Thales board, and to all the incompetent people, unfortunately, that they surround this initiative. I take full responsibility. I work there, and I can tell you that the problem is that AI became an excuse for incompetent to try to speak about something at their gathering at the Montreal GP. And if somebody's listening, they know what I'm hinting to, because
Luca,
social
be
media.
careful. Now you're getting into politics.
I know, but I think that's where AI is going to bring. That's my fear. I always stay away from politics, but I'm telling you, what would be super, I think, very cool about this new wave of funding
Yeah.
is going to be how do we actually help with funding, directing technology in the right direction, or else we're going to build another Volta battery, so the base of the atomic bomb, and then we all know where it went. Everyone watch Oppenheimer, so everyone knows the story. Just saying, is an interesting thing, but I think AI is creating a lot of side indirect damage, and not really, we are not really capitalizing in the right way right now. And I feel the potential that this technology has behind the scene is such monumental, like you were saying, to solve really a million X return companies out of it. Think about
Yeah.
Bayern building the aspirin, like think bigger. Think about something even bigger. Philips building all the MRI machines in the world, and so Siemens. Think about this thing where we can build something really big with tech. Building a website, I mean, Sam,
No, I mean
Dreamweaver,
most
Word.
basic. That's the most
I build
basic.
I build my first website with Microsoft Word. Like nothing changed. Nothing changed.
Lu-
V0 does the same crap as me with Word.
Luca, I really enjoyed the conversation. I think it would be useful to bring up this topic with
Let's do it.
both founders and venture capitalists and private equity people in tech,
Yeah.
and get their view as well. But
Let's bring
really,
Victor. No kidding.
let's bring Mr. Carney and talk to him about the data centers. Let's wrap this up.
Yeah.
I really enjoyed the conversation. I learned a lot as I
More
always do.
fire. Today there was
More
fire.
fire. There was pushback, and
Be
there
like
was
a bam
opinions.
bam follow
Yeah.
up. Let's bring more dynamics to this.
Yeah. Let's wrap it up here.
Yeah.
And next time we meet another guest, either a founder, venture capitalist, or private equity person, I suggest we bring up the same topic and ask the same questions. See what they think.
Let's ask.
All right.
See you next week.
Ciao, Luca.
Oh no, next time. Sorry.
See you next time.